Here on the Transparent FX Academy, every day I share my educational market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the market. So without further ado, let's jump straight to the charts and see where we can be looking for the next potential opportunity. In today's video, I want to speak about CHF JPY. Now, why do I want to speak about CHF JPY? Well, at the moment, the market has just provided quite interesting structure. So as usual, I will be performing an educational top-down analysis. First, I will be covering the technical aspect of this market. Then we will go and see what we have from an order flow perspective. So commitment of traders, COT data, which is basically what the biggest speculators, so hedge funds in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential trading opportunity on the pair. Now, starting here on the monthly time frame, what do we have? Now, here on the monthly, we have a market which has just provided a strong impulse to the upside. Now, in general, after an impulse, you expect the market to provide a correction. Specifically, you would like to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the monthly impulse. Now, in this case, the monthly impulse is exactly from this low to this high, meaning that at least here on the monthly time frame, we expect this market to provide a correction to this zone here, which is basically the 0.382. So the first Fibonacci level to which you expect the market to provide a retracement in general, which currently is lining up at this area. So this is the level that you do expect the market to provide a correction to, at least here in the monthly. Going down on the weekly time frame, what do we see? Now here in the weekly, we can see that the market has just provided a quite strong impulse to the upside, and currently the market just started as well a correction. Now in this case, since here in the weekly we have a different impulse, once again, we have to take our Fibonacci from the low to the high of the weekly impulse. And if we do that, we can see how the market has at 0.382 Fibonacci retracement, which is currently lining up exactly at this area to which we do expect the market to provide a correction to before then starting the continuation to the upside. So also here in the weekly, we do expect a deeper correction before then the market can start the continuation to the upside. Just a quick thing, make sure that you like, subscribe, and also let me know in the comments the topic for the next video. Going down on the daily time frame, however, we can see that we have a completely different structure. In fact, we can see how here on the daily, this area was acting as previous resistance here and again resistance here, and currently the market has broken and closed above the zone, meaning that all this previous resistance is now turned support here, and we can see how the market has just tested this area and started rejecting it to the upside. Now, in a situation like this, there are two possible scenarios. Either the market here will just create this kind of inverted head and shoulders and start a move to the upside, but in that case it's a risky trade because we have already seen that monthly and weekly indicate for a potential deeper correction, or the market could provide this W formation here or overextended W formation. Now, in general, after the creation of a W formation, you expect the market to provide a move to the downside to complete the pattern at the previous resistance, turn support. But in this case, since we already know that monthly and weekly seem quite bearish, if here we will actually have the creation of this W formation, we can definitely be looking for a potential shorting opportunity at least to the neckline, but possibly even lower, because as we have already seen, and I just said many times, higher time frames indicate for a potential correction. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what hedge funds are currently doing in the market, we can see how lately net positions have been decreasing. In fact, we went from having 14.3k net positions all the way down to having 300 net positions. So the CHF is getting quite weak. And if we go and see what we have on the JPY, we can see how on the JPY net positions dropped massively from 50k to minus 47k. So we have a weak CHF and a weak JPY. However, the weakness of the CHF is still not priced in, but the weakness of the JPY is already clearly priced in, meaning that as soon as the JPY will start becoming a little bit stronger, the W formation can easily complete the neckline and even proceed further down. So how we will be approaching this potential opportunity? Well, as usual, we have to be reactive and not predictive. We don't even know if the market will actually create this W formation. But if the market will actually provide this W, at that point with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the upside. Now, why 4-hour and lower? Because monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. But when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday time frames. So with students, we will be monitoring price action from a 4-hour perspective and lower during this move to the upside, waiting for the market to shift from an intraday bullish market as we have right now to an intraday bearish market. And as soon as the market will shift from an intraday bullish to an intraday bearish market, at that point, we will be adding CHF JPY to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to complete this pattern at the neckline, which is this previous resistance, turn support here from a daily perspective. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade them with me every day. I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also can ask me questions every single day and get the answer the same day in the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.